All right, so the Fed just cut interest rates to 0. We talked about that in a previous video. Does that mean that it's time to refinance? The truth of the matter is, maybe. We're gonna go through a lot of different things today. We're gonna cover why you would wanna refinance, why people wanna refinance. We're maybe even gonna cover some things that you may not have even thought about as to why you'd want to refinance. But let's get right into it. I am not a mortgage broker. I do not work for a bank. I am not a financial advisor. That's my disclosure here. But what I did do is I reached out to a buddy of mine who I've known for over 30 years. He is in the mortgage industry. He's the branch manager at Finance of America down in Orange County, California. I'm gonna leave his information down in the description below. So if you wanna talk to somebody, you wanna reach out to somebody, he's the guy to talk to. His name is Eric, just like myself. So will be super easy for you guys to remember. But first, let's get into some reasons why people will refinance. And there's 3 main reasons. You want to reduce your interest rate, you want to change your term, or you want to do a cash out refinance. There's pros and cons for each of those. We're going to cover a lot of those pros and cons. We're also going to cover why you maybe would want to use one or the other, or a combination of one or two or more of those. So let's get into it. Let's talk about the first one, which is, more importantly, the interest rate reduction, which goes to the Fed and them reducing the interest rate. Now, just because the Fed reduced the interest rate to 0, that does not mean that you're going to get a 0 interest rate mortgage. I know most of you probably already know this, but I have to say it anyways. When the Fed cuts interest rates down that low, there's still a lag difference between what the mortgage industry charges, because the mortgage industry essentially has to make their money between that 0. So even when the Fed cuts the interest rate to 1, mortgage industry still has their buffer zone where they make their money. Now, with that said, one of the problems that we have right now is that the mortgage industry is lagging way behind, quite simply because they've been inundated with applications. People have been trying for literally the last 9 to 12 months to refinance their homes. So it really comes down to a supply and demand factor. The mortgage industry or banks or brokers have tons and tons of applications, so they have no real incentive to just lower their interest rates. Now, the challenge there is right now, we're probably going to see some of those applications start to slow down, so there may be better opportunities. But either way, if you take and you have a 0.5 point interest rate savings, there's probably an opportunity for you right now. Let's head over to the computer and let's look at what a 0.5 point interest rate deduction will do to your overall payment reduction in interest over the life of your loan. All right, so here we are in the loan calculator. I wanted to show you guys just how much can be saved by a reduction in just a 0.5 point in your interest rate. So we've set this up. We're using bankrate.com, highly recommend it. They have tons of different calculators. I would use them if I were you. We put in the loan amount of $400,000. Like I said, everybody's situation is different, so I would recommend you do this same calculation yourself. We've got a term of 30 years or 360 months. We've got an interest rate per year of 4%. You can see here's going to be your payment, your total principal paid, which is the $400,000. But what blows everyone's mind usually is how much you actually pay in interest. And on this loan over the course of 30 years, you would pay $287,468 in interest. Astronomical. I mean, literally, it's so much in compared to what you paid. But, they loaned you the money. They let you borrow the money. And that's even on 4%. What's crazy to think about is I think back to like my parents when they were paying, I think, 8 or 9%, which is just mind-blowing what the banks were making in the 80s and 90s. But let's just change that to 3.5% and see what happens to the total interest paid. Boom. $40,000 in savings over the course of the life of the loan. That is huge. Saving 40 grand over the course of the life of the loan just by a little 0.5 point. So if you see that there's a 0.5 point option for you, it's something to seriously consider, even if you're only going from 4. Now look, if you're going from 4 down to 3.25, you can save an additional, just that 0.25 point, an additional 20,000, which is, basically half a point. So these options, if they're available to you, I'd highly recommend you use them and take advantage of them. All right, so as you can see, the amount of money you can save is astronomical, even with just half of a point. And that was going from 4 down to 3.5, which you can still kind of get. We're going to talk about some ways to get there and possibly even lower with some creative options in a little bit. But let's move on to the second option, which is the change in your terms. One of the ways you can use the change of terms on a mortgage refinance is, let's say you've had your mortgage for a few years, let's say 5 to 7 years. You still owe 23 to 25 years on your mortgage. It was a 30-year fixed basic loan. Now, the fact that you're seeing interest rates still come down, it may be lower than when you got your mortgage 5 or 7 years ago, you may actually be able to refinance, put yourself in a 20-year mortgage that will be at or about the same amount of payment as you're currently paying now, and trim off those 3 to 5 years. Who wouldn't want to trim off 3 to 5 years from their mortgage? Now, there are some challenges there as well. You just have to make sure that you look at and say, with my situation, if it's going to increase your payment every month, that you can handle that. So you have to look at those pros and cons and make sure that it fits your financial needs and your financial goals. Now, the last one that we're going to talk about is the cash out refinance. Now, there are some really, really great opportunities right now with low interest rates to do cash out refinances, pull money at a very, very low interest rate, and then invest that money into higher interest bearing investments, whether it be a rental property or it be other types of investments, even in the stock market. There may be some buying opportunities coming in the future. But once again, I am not a financial advisor, and there are risks with any investment, so keep that in mind. Also, keep in mind that typically you will pay a little bit of a higher interest rate when you do a cash out refinance. That's just kind of the nature of the beast. Now, as I said, all three of those options can be great, but be very careful with each one of them. Once again, if you're doing and you're looking for that lower interest rate, don't try and wait for the bottom. I can tell you a plethora of stories. Eric was even telling me stories when we were talking about people that were waiting and waiting and waiting and waiting for, I just want that last little bit, that last quarter point. And now the interest rate that he was offering them is nowhere to be found. That isn't to say that in the future that it won't come back, but once again, you can still get caught. I have a buddy of mine did the same thing with the stock market recently. It was super low. The stock he wanted to buy got really low. He waited and waited and waited, and it went back up. Now, stock market right now is doing some crazy things, and there's a lot of stuff, and that could be a whole nother conversation. But once again, be very careful waiting for that perfect number and missing out on a great opportunity. There's all kinds of different things there, pros and cons, that you really want to weigh when you're looking at doing a refinance. All right, so again, I'm not here to tell you what your situation is. That's a conversation that you need to have with multiple people. Your spouse, your significant other, your financial advisor, and your bank or your mortgage broker. Now, my personal opinion is to sit on the sidelines. I'm planning on sitting on the sidelines. Right now, the mortgage industry is still inundated with applications, but unfortunately, due to what's going on in the world, we're probably going to see that number of applications start to drop. And when that does, simple supply and demand will change the rates inside of the mortgage industry. So I'm saying 30, 90, 120 days, we'll probably start to see the mortgage interest rates start to come down even more and get more in flux with what the Fed is doing on the interest rate side of things. And on top of that, the Fed is not going to be raising interest rates anytime soon. So we do have the luxury of being able to sit on the sidelines and wait. Now, we did talk a little bit about throughout the video of the creative options that are available. Utilizing those creative options can save you a ton of money. Look, if you know you're not going to be in your home, or for example, if you are getting yourself into just a starter home, or you just got into a starter home, you know you're not going to be there in 5 or 10 years. You're just staying there until you start your family, or you're about to retire, or a multitude of different reasons why you may be leaving. Look at ARM options. ARM options can reduce your interest rate because of the structure of those loans, allow you to even pull out cash and still get nice low interest rates and save a ton of money, as we talked about and we showed when we went over to the computer. So look at those options. There's a ton of creative options. One of the greatest things about real estate is there's so much creativity involved. But like I said, reach out to Eric. He's happy to talk to you. He's happy to look at your situation, look at your finances, and decide what the best option is for you. Now, if you found this info useful, please give this video a thumbs up. Really do appreciate it, and it does help with that YouTube algorithm. And if you do want to see more videos on finance, investing, budgeting, and all that good stuff, head on over to my channel. There's a ton of them for you to watch. Lastly, if you haven't already, make sure you hit that subscribe button, hit that little bell notification icon to get notified every time we launch a new video. Hope you have a great rest of your day, and I will see you next time.